Welcome friends and traders. In this demonstration, we're going to discuss auto Mandalas, the frequency of 369, the histogram vibrations. What we are looking at is the frequency detector module at 369:12 a.m. as defined by the inputs. We're looking at the prior window cycle to emit the future window levels. That is the key. The first window up till 3 a.m. is doing the discovery of the initial vibration, which is then projected for consumption in the next window. Keep that in mind. At the bottom, we have contract tracker, where we track the buyers and sellers. We are going to bind the time, the price, and the contracts, rotating, finding inventory levels using auto Mandala. Let's look at this day. We are looking at the frequency of 5 plus 1 is 6 and here is 7. We are looking at frequency of 6, and then also inside the time window we are looking at the frequency of the hour where market might be attracted. All right. If you add the frequency of the entire day, 15 plus 5 is 20, which is 2. And if you add the year, which is 1, is 3. So 2 and 3. So I'm looking at 2 times 3 is 6, 15 is 6. I'm looking at a frequency of 369 to be a critical level to trade to start with. 3 o'clock window is right here. As I said, anything before 3 is used to construct these elements. So after 3 we start trading and we start looking at the numbers. Because this plot is not going to show up until 3 has passed by. We can start trading at 3 onwards. Okay, at 4 o'clock I'm looking at frequency of 4 or 8, and there it is. From the prior window, market is going to go here and reflect from it, and it does. But these plots are not here, they'll come at 6. Remember, at 3 we only have this first plot to work with. At 6 you'll have more plots. Alright. So at 4, we're looking at frequency of 4, and then we're looking at some contract frequency tracking to take place. Here at 6:10, at 6 o'clock, this will plot right away. We're sitting at 6 on 6 at the frequency of 7, which is, we know we're looking for frequency of 4. One 4 7. Here is 1. 369. 147 369. All right. So at 7 o'clock window, between 6 and 7 window, we're looking at 147. They're both sitting here at 6:10 at 6 o'clock precisely. It prints and you take it from there. Earlier window, we know this is going to be 6 is sitting here, sorry, 4 is sitting here, 8 is sitting here, and we got these frequencies. And here you can see the contract tracker, it has 0 or lower, and then we are bullish biased anyways. Now one more thing to understand, this is a time window of 6 and 7. So these both numbers are acting on it right here at 6. So that's why we have a 7, we have 7, 147. Why keep saying 1? 1 is the year number, right? So 147. If I subtract this, 5 minus 1 is 4. We add, subtract, and we divide if there is a multiplier. So if I divide 15 by 5 is 3. Again, going back to 369. So I already have this mind that I'm gonna trade on 369. This is your 9 right there. Now here's a what I said, we need to look at the 6 o'clock onwards. We have at 3 o'clock we have this first window at the 3 close, 310 at 3 o'clock, when the bar is closed at 3, this is printed. At 6 o'clock, second segment is printed. At 9 o'clock, the third segment is printed. So the reference points what we have at 7 o'clock is right here. These two reference points. Let me just explain that very clearly right here. Okay, these two things are printed right now at this time. When the time is going on, these two things are printed. Nothing else is printed. This is not printing until 9 has completed, because we are looking at cycles and we're looking at a big frequency cycles, and they are going to be referenced in the next time segment. The manual Mandala works different than auto Mandala. They have different purpose. So at this time, just have this. All right, so what is happening here? You have 7 printed here and 7 printed here at 7 o'clock. This is where you want to see, okay, where is my 7? Here it is. Now at 9 o'clock, after 9 first bar printed, this is printing. And this is going to be referenced in the future. And here is your 6, here is your 6 is here, 9 is here. You got the idea. All right. 9 is here. After the 9 o'clock has printed, this will print. 9 is printed here at the bottom. Now you're going to reference this between 9 to 10 right here. So this is a little bit, you get used to this, because remember, we just cannot find big bars, because you may have 5 bars, the biggest bar for the day within first 50 minutes. Then what? The whole methodology collapses. So we are anchoring, finding the big bars at 3, 6, and 9, and looking backwards, controlled number of bars. In 10-minute chart, we're looking at 180 degrees going backwards and finding the biggest bar and plotting these frequencies at 3 and 6 and 9. So it may plot exactly at 3 o'clock bar, or it may be offsetting it a little bit, a few bars back, because it is detecting automatically the biggest bars. So that is the key to understand. Okay, so at 3 o'clock, this is what you know. This is where we are. This is where we are. So this is what we need to see where market is going. And we have this number 8, and we have all these frequencies plotted on this. After 6 o'clock, these two frequency segments are ready for us to use in the trading. All right, so now this is example of 12, 13, 14. 14 is what? 2 o'clock, looking for a short. Where is time? Well, time is at 2. Where is the price? At frequency of 2. 2 on 2, right there on the top. Right there. At 2 o'clock, the frequency of 2 has been met. This is where market was going, and we have the segment to go short from contract tracker. Between these two lines, we are looking for shorts right here, and below this, we're looking for longs. We're looking for longs, looking for longs, looking for longs. All right, so I hope that makes sense, and now we can go a little bit more complicated on decoding these frequencies. Now again, this is plotted at 9. All right, we're looking for what frequency for that day? We're looking for 6369. Okay, if I add if I do the subtraction, I'm looking for 4. 4 is double is 8, and also a sequencing of 369 is 147258369. 369. So I'm looking for all these things to come in a detective fashion to use it. All right, that's the whole story. So this was the best trade where everything came together. If you were patiently doing this, how about other trades at 10 o'clock, 11 o'clock, 12 o'clock? All right, 6 is half of 12. Remember, energy doubles or it halves. There we go. You have to think before you trade. What we are doing, why are we doing, and what's the purpose of doing it, right? Otherwise, it's just not healthy. All right, this is 6 and 2. This segment is usable. 6 and 2. 6 o'clock, 7 o'clock. I'm looking for 6 right here. 6 on 6. Remember, at 6 o'clock you will have 2 segments. 3 o'clock you will have 1 segment. After 3 you will have 1 segment to use. After 6 you will have 2 segments to use. After 9 you will have 3 segments to use as reference points. And this is where you start trading with numbers. I hope this gave you some insights. Let's look at today. You should have a winning day every day, bottom line, and you should be trading where you can understand. Now on this day we're looking at 9369. We're also looking at the extreme Mandala yellow bars. From this segment is compressed big bar, boom. This is extreme levels, same as Mandala, as you guys are already aware of it. All right, so there it is. So this segment is printed. We are looking at 9369. Okay, this 9 is sitting right here. 9 is here, and market goes. These segments are printed, usable for us. Gets deep into it, into Mandala, reversal bar, boom. 9 is sitting there, 3 is there, 369. So there are numerous applications. We got to watch it, understand the numbers, frequencies before they happen, not after the fact. We don't do after the fact business here at 369forecast.com. Looking for a short here. Look at the contract. Perfect opportunity right here. We shorted a lot of options here. All right, so segment to go short, 369 reversal double helix, as you can see. We understand that. All right, what else is there? Now if you see here, one more thing, it's a cluster of 7 and 8. Okay, at what time? 9. So 7, 8, 9 came together through a time and a price boundary conditions. All right, right here at 9 o'clock we had a frequency of 7, 8, 9 at 9, completing the whole circuit of 7, 8, 9. I hope that makes sense. And now we're looking to go short anyways because of this. See that? All right, So now you see market is not random, it is decodable, not to the naked eye. So this segment is ready, this segment is ready, this segment is ready, right? So now talking about these two segments, we are here going to go long, here we're going to go short, going to go long here. What is the reference here? We're looking for some frequencies. That's your 7 on 7 o'clock, 7 o'clock reference point. And here is 7, plot it. Here is a long at 7. You see that? How the time and price and frequency is coming together. Alright, my friends and traders. Thank you.